Why does everyone seem obsessed with Bitcoin, even when it keeps crashing? If you've ever wondered why some investors keep pounding the crypto drum, even as the price swings like a roller coaster, stick around. Today, we're cutting through the hype and confusion. By the end, you'll understand what crypto enthusiasts see in Bitcoin, why it's so volatile, and how it actually compares to tried and true US stocks. Let's get right to it. If you're feeling crypto FOMO, you're not alone. Friends, colleagues, maybe even your barista, everyone seems to have a Bitcoin story or opinion. But here's the reality. Bitcoin's price history is full of jaw-dropping gains and stomach-churning drops. In just the last few years, we've seen it soar past $60,000, then crash back below $20,000, rebound again, and tumble some more. For many traditional investors, it looks less like a safe portfolio and more like a high-stakes poker game. So why do people keep pushing Bitcoin? What are you missing? Let's break it down. First, Bitcoin is new, at least compared to stocks. It was invented in 2009, making it a teenager in the world of investing. US stocks, by contrast, have been around for over a century. The S&P 500, which tracks the largest American companies, has weathered the Great Depression, world wars, the dot-com bust, the financial crisis, and the pandemic. Through all of that, it's delivered an average annual return of about 10%. And that's not just luck. It's the power of steady economic growth, innovation, and, honestly, a lot of resilience. Bitcoin, on the other hand, is often pitched as digital gold. Supporters say it's a hedge against inflation and government money printing. It's decentralized, meaning no central bank can print more of it, and there'll never be more than 21 million Bitcoins. That scarcity is a big selling point. In theory, if demand keeps rising and supply is limited, the price should go up. In practice, it's a wild ride. Now let's talk volatility. Stocks can be volatile, but Bitcoin takes it to another level. Since 2014, Bitcoin has seen drops of 30% or more over a single month, multiple times. The S&P 500, those kind of drops are extremely rare, usually tied to major crises. For a typical investor, that kind of extreme price movement can be hard to stomach, especially if you're planning for retirement, college, or just want to sleep at night. So why do people still advocate for Bitcoin? Part of it is the potential for huge returns. Early investors turned a few $100s into fortunes. Stories like that fuel hope, and yes, sometimes greed. But there's also a belief that Bitcoin offers something stocks can't, an escape from traditional finance. People who distrust central banks or who live in countries with unstable currencies see Bitcoin as a lifeboat, a way to store value outside the system. Let's put some numbers around this. If you'd bought the S&P 500 10 years ago and reinvested your dividends, you'd have roughly tripled your money. Pretty solid. If you'd bought Bitcoin in 2013 and held on through every crash, you'd be up thousands of %. But, and it's a big but, most people can't hold through those wild swings. Research shows many investors sell at the worst times, locking in losses instead of gains. Now, some financial advisors do recommend a small slice of crypto in a diversified portfolio, think 1% to 5%. The idea is that because Bitcoin doesn't always move in sync with stocks, it could help reduce overall risk. In technical terms, that's called low correlation. But that potential benefit comes with a warning. Bitcoin is still young. We just haven't seen how it will behave in every kind of crisis. Will it hold up like gold in a deep recession, or will it crash even harder? There's also the question of regulation. Stocks are heavily regulated. If you own shares of Apple, there are rules and protections in place. Crypto is the Wild West by comparison. Governments are still figuring out how to regulate it, and exchanges have been hacked or collapsed. Remember FTX? Billions lost overnight. That's a risk you just don't have with blue chip stocks. So, to answer the original question, how is owning crypto better portfolio management when US stocks have come through every crisis? The answer is, it depends on your goals, your risk tolerance, and your belief in the future of money. Bitcoin isn't a guaranteed ticket to wealth. It's a speculative asset with big potential rewards and very real risks. If you're considering adding Bitcoin or any crypto to your portfolio, experts say, do your homework, be honest about how much risk you can handle, and don't bet more than you can afford to lose. Diversification remains the golden rule. A mix of stocks, some bonds, maybe a dash of crypto if you're feeling adventurous. That's a time-tested approach. At the end of the day, remember, investing isn't about chasing the hottest trend. It's about building lasting wealth, protecting your future, and sleeping well at night. Bitcoin may play a role in that story, but it's not the whole story. If you found this breakdown helpful, hit like, drop your thoughts or questions in the comments, and subscribe for more clear, no-nonsense financial insights. And as Bitcoin and the world of investing keep evolving, ask yourself, is this next big thing right for me, or just another chapter in the age-old story of risk and reward?